are doing really well. So I'm going to pull up a couple of charts before I get to Vijay Chopra from Enoch Ventures. Bring up GMR Airport Infra. That stock has surged in trade today. 80.65, 5.84% higher. This is where GQG put in money at 60. The stock had opened up higher and now continues to march higher. This would be now close to 50,000 crores of market cap. Really strong show, but the only listed way to play the airport infrastructure story in India. So really strong show here. The other one, if I'm not wrong, is Inox Wind. We spoke about it on Editor's Cut today, about Inox Wind and Suzlon and what's happening there. At 500 now for Inox Wind. So good showing there. Wonder if Inox Wind Energy also has got some traction. But those two, IWEL and Inox Green is the third one. Some pretty strong showing for those stocks as well. Inox Green is up 4% at 105 as well. Vijay Chopra, MD&CEO of Enoch Ventures, joins us right now on the show. Vijay, thanks so much for joining in. I hope I'm getting that name correct. Enoch?
Absolutely.
Perfect. Vijay, thanks so much for taking the time out. Last day of the year, I wonder if for most of the clients or the money that you might be investing in, are you now a bit skeptical about putting fresh money to work here, or are you still constructive?
I think that, markets are always like that. They do their excesses. And when we see excesses, we should, try and flip that money into those where, the capital is safer. So we have seen euphoria in mid cap and small cap companies. And, my sense is that we should constantly keep on booking. So at higher levels, when the, stocks reach, they're into, kind of a euphoria territory, we generally book and get into more, saner stocks, so to say, and into sectors where, the damage could be minimum in case there is a correction, because there would be a very sharp correction. So during the course of this interview, I'll also name some companies where we are, recommending our clients to invest. But I think that, markets are in a good bull run, and still there are great opportunities to get into. There are stocks and sectors and companies where, we have not seen this kind of euphoria. So book the euphoria, keep the money in your pocket, and look for opportunities, which are there at lower levels. There are sectors and companies where definitely money can be put in.
Okay, and we will, of course, talk about that as well. But there's just this very strong traction that is there in FMCG, Vijay, and some extremely strong moves, just not yet today, but even yesterday. Is it rotation at play, and which is why you're seeing the last of the bastions now starting to move up?
Precisely, I think so, because money is moving into safer havens. Look at Dabur today, look at ITC today, Hindustan Lever, even Imami, as you mentioned, PNG. So these companies are safer havens, definitely, because we have seen a literally a vertical move in certain stocks. So money is definitely moving from high beta to these companies which are and sectors which are much conservative and have a very strong lineage of numbers. So all these companies have been recording great profits, and with crude coming down and the inflation softening, the FMCG sector, which was reeling under a lot of inflation pressure, should do well in the coming months and quarters.
Okay, well, stay on. So much more to talk about, but first, let's go across to my colleague Himansh, who joins us right now for the volume buzzers for the day. Himansh, good afternoon.
So the volume buzzers for the day are, a lot of them are dominated by the news flows around them. Firstly being Kalpataru Projects after its significant order win for 3,244 crores, which also marks its foray into the metro tunneling space. We are seeing volumes jump 22 times their 30-day averages, and the stock has inched up, not even in fact inched up, but surged up 11% nearly intraday today. Then you have CMEX shares that were trading higher for the third consecutive session today after signing an MOU with Hindustan Aeronautics for offshore charter hire of their sea vessel for a period of 3 years, and this is a $9.6 million deal. So a significant mark there as well. The volumes are up 15 times the 30-day averages, and the stock's up nearly 14% intraday today. Then coming on to Techno Electric, the company gained nearly 7.7% on a record high after the company won a transmission and electricity metering project worth 1,750 crores. And the company won orders worth 710 crores in transmission segment and 1,000 crores odd in the metering infrastructure as per the last quarter. Olectra Greentech, along with several other automakers like Tata Motors and Ashok Leyland, are seeing gains after reports of EV plans for 8 lakh diesel buses that are going to be replaced with electric buses. Lastly, you have Surya Roshni, which are trading higher with heavy volumes but with no apparent news flow. Similarly, also seeing 3M India, that's noting significant gains for second day in a row. But again, no apparent news flow there, just volumes.
Okay, well, but some significant volume uptick there, Himansh. Thanks for that. Just stay on. I would want to talk about Tata Motors as well, which to my mind is the stock of the day. But just before I do that, Vaishali, come in on, let's say, a play like Olectra Greentech or an Inox Wind or Inox Green or a Suzlon, everything related to clean energy, electrification, etc., has had a bit of a surge today. Anything that stands out on the charts for you?
Sorry, so Inox Wind, yes, it is looking very, very strong, but it's already in a new price territory. So I would say, those who are holding should continue holding the stock because I think it has got a very good upside projection. But for a new buying opportunity, I would look at Olectra Green, even Suzlon. After making a high, it has consolidated and getting into a new round of, up move coming from a prominent support level. And Olectra also, after a very long consolidation, I'm seeing a good bullish candle occurring today. So these are good buying opportunities. But Inox Wind, I would be wary of because we've already seen a good run up, just a one-way move. So wait for a dip to buy if one needs to buy at lower levels.
Mm-hmm. Okay, fair call. And yes, the stock has had such a strong run that people can't be faulted for wanting to ensure that safety is on your side. But could you say that about what has arguably been the stock of the day today? And that's Tata Motors. May not be as high as 6% today, but it's still high, about 3.5% currently, is the stock of the day. What could be behind the rally for the day, for the year? Himansh has some analysis there. Himansh.
Thanks, Niraj. For Tata Motors, it's been the first Nifty 50 company as of today that firstly doubled over the past year. And secondly, after noting gains of 6.5 times and volumes that jumped nearly 5 times their 30-day averages, the stock has clearly made its mark. Over the past year, I'm seeing that it has overtaken Mahindra and Mahindra in terms of its market capitalization as well, comprising in the auto pack. Well, this comes in the backdrop of the recent news flow that you have EV makers that are surging on reports that 8 lakh diesel buses are going to be switched to electric in the near term, and you have this plan comprises everyone when it comes to electric buses for the state transport units, be it private operators, be it schools and employee transport as well. It encompasses all of them. Fundamentally as well, Tata Motors has been seeing quite an improvement, strong performance coming in from the JLR segment, debt reduction plans that have been, at play and is expected, Moody's and S&P recently upgraded the outlook on the counter as well. If we are talking about margin profile, they have been seeing an improvement sequentially on a quarter basis as well, and as well as annually that you're seeing them inch up towards the 11-12% levels that they once were at 2 years back. In terms of analyst recommendations, you're seeing 28 analysts recommending a buy, 3 a hold, and 4 a sell. However, the consensus estimate as of now, the consensus price implies a 6% downside to current levels. So could be a case of the stock running up too much, but it's a wait and watch in terms of performance.
Okay. Well, thanks, Himansh. Thanks for that analysis. Unfortunately, we have to slip into a break, but we will carry forward this conversation on Tata Motors on the other side of this very quick break. Stay tuned to NDTV Profit. Well, a lot of red on the green on the screen as yet. As you can see this heat map for now as well, the green is getting overwhelmed by the quantum of red, and which is why the Nifty breadth notwithstanding, the index itself is under a bit of pressure. But yes, when Infosys is down about 1.5%, there is weakness in SBI, there is weakness in let's say an NTPC, not as big a heavyweight, but ICICI Bank, and Reliance is down about 0.75%. It's very difficult to combat that weakness. Not that we are falling, like I said, but just that there is a bit of a weakness in the markets. But what is doing well is Tata Motors, 4% higher. Vijay, the stock has done really well. What should somebody who's invested in it do when it comes to Tata Motors? Okay, maybe Vaishali, Vijay, you'll have to unmute yourself.
Yeah. So, definitely, I've never spoken this on NDTV Profit, but I've been advocating to buy Tata Motors since it was almost 200, rather lower than 200. I always call it India's Tesla or India's answer to Tesla. Over the years, Tata Motors has done wonderfully well. They're on the brink of being a debt-free company. The kind of models they have come up in India and abroad, I think that with easing problems globally, JLR should start doing well. I still think that Tata Motors has a potential of going to 900, and this was a target which I gave almost 2.5 years, 3 years back. So again, a fantastic company, portfolio company. It might correct a bit, but again, long-term investors don't panic. Keep on holding. Definitely don't buy now because this is not the time to buy Tata Motors. There are other stocks to invest into. But yes, Tata Motors has done a stupendous job, and I think that it is going all the way to 900.
Okay, and is our valuations palatable at this 800, 900 levels, Vijay?
Well, I think when it is supported by numbers, look at the revamp the entire company has done. From being a laggard in the car industry, it is now a preferred name. People are looking for. I'm talking about India presently because it was purely dependent upon JLR a few years back. Now look at the models it has come up with. It has come up with Altroz, Harrier, and new Safari, and new other Nexon and Nexon EV. It is the largest player in EV in the country. It's a backward and forward integrated company. So from steel to power, the Tata Motors, Tata Power has got a lot of contracts across highways to set up, charging stations. So I think that it has a fantastic lineage, great company, great management, and valuations are just a subject of revenues. I think that revenues are coming in, and the kind of overhang of debt which was earlier there it's no more there. And Mr. Chandrasekharan was very confident that it's going to be a debt-free company. And as I said earlier, with the global problems ebbing, the JLR sales would definitely start looking up, and Tata Motors would be again. I think that, as I said, it's a portfolio stock. The valuations would be justified for sure.
Okay. Well, so that's Tata Motors, which is one large cap which has done well. The other one which has done really well is Gail. Now, Petroleum and Natural Gas Regulatory Board set the tariff for Gail KG pipeline. Consumers will have a lower gas prices, but also there is brokerage from Motilal Oswal, which has put out a note saying that Gail is the top pick for 2024. My colleague Mihika joins in to tell us about the same. Mihika, good afternoon.
Good afternoon, Niraj. So yeah, the tariff was set on the Krishna Godavari basin, which is off the east coast of India, and the tariff was set as rupees 8.4 rupees per MMBTU versus the 37.01 rupees that was proposed by Gail back in June. Now the tariff is set for the transportation of natural gas through the pipeline. Now what the tariff indicates is low gas prices for consumers, and it's beneficial for industries as well as households that do rely on natural gas. But when it comes to Gail, the revenue per unit of gas for the pipeline could decrease significantly. But the lower tariff could also incentivize the producer to, pass through more gas via the pipeline. And this could, the lower price could also help Gail get a competitive advantage over its peers, and it could attract new clientele. We also had a Motilal Oswal report on Gail, and it maintained a buy rating at the target price of 195, and this implied a 24% to the previous close. And it also said that Gail was one of their top picks for 2024. Now, Motilal Oswal expects Gail's volumes CAGR to be around 9% over FY23 to FY26, and this will mainly be fueled with the increase in domestic gas output by the oil exploration companies like Reliance, Oil India and ONGC. It also said that the Indian gas consumption will aid with the new 5 terminals that will come on stream, and it expects the transmission EBITDA as a percentage of total share of Gail to reach 46% in FY26 versus the 40% in FY23, which would also give the company a little more earnings visibility. And lastly, it expects the petrochem segment of Gail to become profitable at an EBIT level, and the new plant in Usar will add up to 9% of standalone EBITDA for the company.
Wow. Strong numbers. Thanks, Mihika. We'll take a fundamental view here too, but Vaishali, I would love to understand what do the charts look for Gail, because it's had a good surge today.
Actually, it is in a very strong up move, and chartically also it looks very, very positive. But I would say that, yes, one should keep a trailing stop loss of 150 levels, because if the view goes right and the rally continues, I would be looking at a target of 170, 175.
Okay, so about 170, 175 target, but a stop loss at 150, very important. Okay, we need to slip into a break, like I said. On the other side of the break, we'll try and get in some BTST ideas from Vaishali. Well, or buy this year, sell next year. You can almost say that even that will be true. But also try and get you a derivatives perspective from Agam, and some management opinion on sugar and more. Stay tuned. Back with India market close right here on NDTV Profit. In a bit, we'll get in my colleague Agam to talk about what the FNO data is indicating as well. But just keep in mind that the global markets are a bit supportive as we head into the close. If you see what Europe is doing, I think we are largely seeing a tinge of green on the European market. So that's the first piece. And the Dow futures, the last time I checked, were not trading all that adversely. So that is the other piece. That's Europe on your screen. CAC about 1/3%. DAX about 0.2% as well. So the global markets are not looking all that bad. Now, what about the derivative data on the first day of the new series? Mind you, we are looking at a year end, but for the FNO market, it's the first day of the Jan series. So volumes might be a bit thin any which ways. But Agam, take it away. What are your key observations?
It is. Volumes certainly are not as high as what we have seen over the past few days. And trading activity has been fairly quiet. I know we are looking at about a 4% increase in open interest towards Jan series, but that's perhaps on expected lines. And even as we see the benchmarks come off to a certain extent, the question is this towards fresh shots? Well, no, absolutely not necessarily. The only thing at the moment is that we are just looking at a lot of traders and investors building on positions, but that does not necessarily mean that we are looking at shorts, despite the fact that the benchmarks are currently marginally in the red. Do remember that we also come off from day's lows at the moment, and there's a possibility that the benchmarks may in fact close in the green. That's something that the balance half an hour will determine. But even in terms of the bank Nifty, we have seen an advance coming off from day's lows, still an increase in open interest, and it's going to be a wait and watch whether or not this is towards shorts or no. Let's talk about the option space and what the positioning in terms of open interest in options is indicating to us, and it is a 500-point range based on maximum open interest in the 21,500 put. And on the higher end, it is a 22,000 call. A lot of traders that we've spoken to today and a lot of analysts that we have had conversations over the past few days are of the opinion that should the Nifty eventually go to 22,000 over the course of the next 5 days, we could see a little bit of a correction from there on, because at that point in time, we will have seen the Nifty overheat substantially. But and which is also the reason why we're looking at a lot of writing around the 22,000 call, as you can see here. And of course, a lot more addition in open interest as far as puts are concerned as well. To talk about those stocks which are seeing an increase in OI, and I reckon we mostly have longs building up in Nalco, Balrampur Chini, and Samvardhan along with M&M Financial. India Mart Intermesh is actually looking at a bout of profit taking, which is down by as much as 2%. Some shots building in there. Largely mixed cues as far as markets are concerned in terms of those stocks which are seeing unwinding. And again, this is early days, so we really can't determine too much in terms of trends. But Hindustan Copper, which had advanced substantially yesterday, is looking at a bout of short covering. MCX, HUL, and Torrent Pharma, among others, which are also, looking at short covering. It's a mixed day of trade. And the question really is, where do we go after we have already seen a very, very strong December come through?
Yeah, thanks, Agam, for that. And seasonally, it'll be interesting to do an analysis of when is it that after a very strong December has January performed. But we do know that out of 7 out of 10 or 8 out of 11 January performances in the last few years, 11 performances, let's say, 8 times January has not been a month of great returns. So that's the overhang that you have to contend with. Keep in mind that we've had such a blockbuster December, if you will. If you can pull up the 1 month chart of our markets and just see this 8% higher for the Nifty. And by the way, the broader markets have probably done even more. So if you bring up, let's say, the small cap index, though large caps probably are now neck to neck with what mid caps and small caps have done relative to what's happened at the start of the year. Small cap to about 0.87%. But mind you, if you zoom this performance out for the rest of the year, large caps have underperformed and small caps have. It's just that the last 1 month, all market caps have now come to the fore and try and done this. Small caps, 56% or 57%. Large caps, I think, are about 18 or 19%, if I'm not wrong, for the year. 19.5% for the Nifty. So strong show, yes, but let's see what the month of January holds. Vaishali, if you take positional trades, wondering if January would have a higher probability of a positional short working better than a positional long.
Well, as I said, I would still go stock specific. I would not go short right now because there is no indication. But the minute we see a break of 21,500, well, that would trigger many sell calls from there on. But for now, I do have some trading ideas, which still I think are technically well placed. So one of them is LIC housing. If you look at the chart, it is on the verge of a technical breakout. So above 540 levels, even on a weekly chart. So I would say keeping a stop loss of around 525 or 520, I would look at a trading target of around 565 to 570. So this is one of the stocks that I like from here. The other one, well, as we spoke about Ashok Leyland, it's open very strong and it has not participated all this while. So I would look at Ashok Leyland from here on 170 as a stop loss, and I would look at a trading target of 190 to 195. So these two stocks currently are to my liking in the front line.
Interesting. Well, you could argue that there is some reason for Leyland too, because some of these auto stocks have done so well. LIC Housing Finance is the interesting one. I heard Vaishali say it's on the verge of a breakout. So do keep that stock in mind as well. The point, Vaishali, about some of these housing finance companies, that financials largely have, except for the month of December, not really played a part. So is this the strongest one, or are there other financial charts which look promising too?
Well, this is what I am focusing on right now. So I am, my view for...
No, okay. What about HDFC Bank? Let me ask you point.
So we have already seen a good run up, and I would not take this as a trading strategy. It is an investment buy. So we were all shouting a buy right from 1550, 1600 levels. And now the rally continues. So it would be a buy at every decline because we are now looking at 1800 to 2000 levels in HDFC Bank. So these stocks, ITC, HDFC Bank, they don't really make a good trading bet.
Got it. But 1709, from an investment perspective, maybe it was 100, 150 points ago. But Vijay, HDFC Bank, the big boy, in the month of December has made some bit of its presence felt. Doesn't mean one should buy. I'm just wondering if there is an investment case here for somebody in HDFC Bank.
No point buying at these levels, as I said. You have to sell the euphoria. You should not buy the euphoria. As I said earlier, we have seen a decent run-up. In certain cases, certain companies, it's a vertical run-up. So no point of, unnecessarily risking your capital. There are scores of companies which are available at a discount or at a, very good valuation. So why not go there? Why only HDFC Bank? This is a portfolio stock. For those who have it, they can keep on having it. Again, HDFC Bank is going to be good for the next 10 years, 20 years, maybe. It's going to be relevant. But, for traders especially, as Vaishali said, I don't think that, one should get into the stock right now. For investors, definitely, it's, buy on a decline. If you want to get into HDFC Bank afresh, wait for it to come down below 1500. That would be a great level to get into. Okay,
you've told me twice about how there are some stocks which are either available at a discount to the intrinsic value or special situations, as the case may be. Can you talk to us about some of those, one or two of those?
Well, I think that Dabur is one company I like, which is trading at about 555, 556. Again, FMCG behemoth, so to say, a legacy of over 100 years and a fantastic distribution channel. So I think that Dabur can go up to maybe 650 in the longer run, 600 in the medium term. I think companies like Navin Fluorine, this is another company I like. Chemical space, especially companies into the fluorine space look very good. SRF has done well. I think Navin Fluorine has still to catch up, and I believe that it can definitely go up to 4,300. Again, couple of railway stocks, RVNL and RITES. As I mentioned, only 2 stocks, so I'm mentioning 4. RVNL and RITES also look good on the charts as well as fundamentally, looking at their order book and the kind of interest railway sector has got in the past few months.
Okay. Some detail around Navin Fluorine, why that versus a clutch of other spec chem companies, though not many would be in fluorination except for maybe Gujarat Fluoro. But why Navin Fluorine versus so many other chemical companies out there?
Well, we've seen a decent correction in Navin Fluorine, and that makes it interesting. It's a good company. Cash flows are stable. There has been a very good EPS growth quarter on quarter. Due to the exit of a senior management personnel, the stock fell down. I think technically also there's a big gap left in the charts. So I think that there's a catching up issue which it will do. Revenues are kind of stable, so no problem at all. It's a good sector. Chemical is rebounding, and I think that all the fluorine companies, whether it's SRF or Navin Fluorine or Gujarat Fluoro, all these companies are going to be in demand. The product is good, and it's a good consumption story as well.
Yeah, the MD no less, or the CEO, if I'm not wrong, one of the two. Here's a head honcho. I don't know whether the designation was MD or CEO, but left Navin Fluorine in the stock came off. If you pull up the chart of a Navin Fluorine YTD, you will see how that announcement led to a sudden sharp correction. There you see on your charts into Navin Fluorine, and since then it's found it difficult to recover. I think the litmus test could be what they do for both the quarters, not just the OND quarter, but also the Jan, Feb, March quarter, the second half numbers from Navin Fluorine. And if they come out with numbers which they have traditionally delivered, if you will, with the same kind of gusto, of course, keeping in mind that the scenario is slightly different currently for spec chem relative to what it was maybe 3 years ago, could be an interesting one to monitor. But this whole space is looking very, very interesting. Vaishali, you can't shy away from talking about spec chem, because those stocks have made their presence felt, and how in the last 7 to 15 days. What stands out for you, if anything?
Well, I'll go definitely chartically, purely on chartical terms. I would look at Balaji Amine. Look at Balaji Amine. It's on its way to recovery, and there is a lot of upside potential. Even talk about fertilizer stocks. Let's talk about Deepak Fertilizers. As far as the other chemical stocks and spec chem, if you're talking about, we had recommended Aarti. Aarti gave us a good run, and I think still there is further run up. So I would say let's go stock specific, and so we are bullish. And likewise, as you just mentioned about Navin Fluorine, even I would match the view technically. Also, we have been recommending, because there is a good scope of a bounce coming to at least 4,200, 4,300. So yes, these are the stocks to my liking right now. And there are many stocks in the chemical sector. Talk about Sudarshan Chemical, talk about, as I said, Alkyl Amine and Balaji Amine. All these stocks look very favorable for an entry.
The last few days, you have to say the twins, Alkyl Amines and Balaji Amines, have actually had a really good run. Let's see if there is more in store. What's having a great run is sugar. The companies are buzzing today. Sources to NDTV Profit have indicated that oil marketing companies have increased the price of ethanol from CA heavy molasses by 14% per litre for the year 2023-24. Atul Chaturvedi, Executive Chairman of Renuka Sugar, spoke to us earlier. Listen into what he had to say.
It is definitely going to benefit the industry, because C molasses at around 49 rupees or thereabouts per litre was not making too much of a sense. And I'm sure the marketing companies probably realized that if they need to give some incentive, as it is, the cane juice ethanol is practically banned, and B heavy was also banned. So it definitely made sense, and we were all expecting this announcement to come. because the industry has been in a dialogue with the government, and it makes sense for them to incentivize. Otherwise the whole program would have got scuttled big time. But now with this announcement, probably, I think this year's blending ratio may get impacted only marginally, not big time. But definitely it is not going to be as much as what it was last year, for sure. So it's a welcome move from the government, for sure.
The last few days, there has been some pullback in the sugar names, but there is an uptick today because of maybe this development. Now, Vijay, do you look at sugar closely? Do you like the business, and do you like any particular business out there?
Definitely, I reckon that with ethanol story and, the kind of investments the companies made, in ethanol blending capacities, there was a huge story around it because, we definitely require companies to, even the OMCs had tested about 20% blending of ethanol. But I think that, with this story going off and, somehow there's a kind of confusion what would actually happen. But again, the story is still intact because the liquor sector would require ethanol, number one. Secondly, it's a consumption story. Thirdly, most of the balance sheets are clean now, because if you look at 4-5 years back, the balance sheets had a lot of debt overhang. Now the debt overhang is not there, so these companies can do well. So among the sugar companies, I think the strongest ones are Balram Chini and EID Parry, which I like. And surely I think that Balram Chini can go back to 460, 470 odd levels. And so I think that EID Parry has also a lot of promise. These are very old companies, good balance sheets, some of the best in the sugar industry. And I think that, with these worries ebbing, and increasing of the ethanol prices, there is some kind of a moderation which has happened. So I think the companies would do well. There's already a correction which has happened due to the bad news, ethanol news. But these companies would slowly start coming up.
You're looking at some of these sectors so closely. Fundamentally, I'm inclined to ask you, Vijay, have you looked at aviation? And there is only very limited listed play out there. So on the airline side, it's Indigo, maybe a SpiceJet. On the airport side, it is just GMR Airports right now listed. At some point of time, Adani Airport Holdings will come into the play. For now, though, very limited play out there. But I'm asking this to you because GMR Airports today has had a really strong move. Any thoughts here?
Well, I remember the times when GMR used to trade at 300 plus. And, the stock literally went down the dungeons and, was trading at abysmally low valuations, looking at the kind of assets and the kind of earnings these companies had. There was a lot of debt overhang, which definitely has come down over the period of years, and the balance sheets are looking much better. The kind of assets GMR has, I think that, the stock has the potential of going up to maybe 150, even 200, but over a period of time. Don't jump into, buying a GMR right now. It has run up quite a bit. Wait for a correction. If you get a GMR, maybe around, say, 60, 65 levels, it's a great buy. People who are having it for long term, it might correct, but again, don't worry. GMR has a lot of potential in store. And definitely, I think that balance sheets would look much better looking at the traffic which has come in the last few years, and the number of flyers and the flight occupancies are almost nil. I'm seeing a lot of flights, especially to the busy sectors. They are flying full, and of course the fares have gone up quite a bit. So there is money on the table for GMR with the kind of traffic we have nowadays. So this company should do well in the longer run. But yes, in the short term, wait for a correction to get it.
Keep in mind, viewers, like I said at the start of the show, smart money got in at about 60. There is talk of tariff hike at the Delhi airport. Maybe that is one reason why GMR Airports today has given this sharp surge of 6%, but a very strong way to end the year after what has been for them too a landmark year. 104% uptick for GMR Airports in 2023, and a sharp move from sub 60 to 80 in the month of December itself. That's about a 33% return that has come in the last 1 month itself for GMR. Yep, 33.42 exactly to be precise. it's been a really strong show for GMR Airports. It's a derivative stock too. Do you track this one, Vaishali, on the charts? Sorry if you've asked this before, but if we haven't discussed GMR Airports.
I definitely do. And yes, we had tracked the stock. I would be very happy to say that, yes, we had recommended the stock right from 62. And in fact, yesterday, after a bit of a retracement, we saw the stock getting into momentum right from 76 levels, I think. And we have generated this one more time as a trading strategy. And I would now be looking at a target of 100. Because if you see the monthly chart, the previous high, the prominent high that we have seen is 100. So that is my next target that I would be aiming for. And my now stop loss comes to 65.
Okay. So stop of 65 and a target of 100. So keep GMR Airports Infra on your radar. Vijay, of course, recommends that if you want to get into it, it's a great stock, or a great business. But if you get into it at a bit of a dip. It's 3:20. So before we take in the final set of questions with both of you, Vaishali, last 10 minutes of trade left. You've given us enough ideas, but if I had to ask you for one top closing strategy, a BTST or a STBT as the case may be, what would that be?
Well, so BTST, I would now look at Chola Mandalam Investment. Right now, it is getting into momentum. There is a good volume pickup also. And well, 1260 is the price right now. I would be looking at 1300 target with a stop loss of 1240.
Okay, so Chola it is from Vaishali's end. We've gotten a couple of investment ideas from Vijay in the form of Dabur being the first one which he had recommended. So keep that on your radar as well as an investment idea. But of course, please do your own research before you, not just on NDTV Profit, but wherever else you hear an idea. Please do your own research and then go out and invest, because when a guest recommends a stock, she or he may change his opinion in 1 week, 1 month, 1 year's time, and might not be able to tell you as well. What's done well, like we said, just before we take in the final set of questions, Idea and Indus Tower, both of them had a good move today. But Vodafone Idea is at 21% higher at $16. Indus Tower 2 at 7% higher, 198. So that's done well. 3M India is back with a bang after sulking in trade yesterday. It's come back very, very strongly. There was a report on Macrotech today by Batliwala and Karani brokerage. And that stock, Lodha, is up 4.21% at 1,029. So that's done well for itself too. And last but not the least, just look at what's happened to the FMCG winners. I mean, we spoke about, Dabur, but Emami is up 6%. There is strength in Godrej Industries. There is strength in a clutch of other names. Tata Consumer, for example, 4.5% as well. So good going for all of those. Okay, Vaishali, before we leave you, a word on any of the FMCG behemoths which have done really well. Maybe we've spoken about it, but Tata Consumer, Emami, Godrej, Dabur, all of them buzzing. Is there a first amongst the equals there?
Well, we had already recommended Nestle to start with. So Nestle is doing very well. But now I think at a fair value, I would look at IDC definitely. And the other ones which I would like is Hindustan Unilever and Dabur. These are the three stocks which are still having scope of a lot of upside. So I would recommend these stocks.
Okay, we'll watch out for that. Vaishali, thanks so much for taking the time out and giving us your view. Now, and really good having you, to you and your team and family. A very happy 2024. Vijay, just stay on. We have a fundamental piece of news on which I would want your opinion, and we'll just get my colleague Sessa to talk on that. Because after deciding to cut margins amidst low demand, FMCG giant HUL is facing the ire of distributors who warned about halting purchase from the company. Sessa is joining for more on this. Sessa, what are you picking up?
Right. So, what we are getting to hear from the distributors that HUL has cut the fixed margin from 3.9% to 3.3% and has increased the variable margin, which is based on performance, from 0.2% to 2%. This is across the general trade distribution network. Now, for the non-general trade distributors, the performance-based margin is hiked from 0.4% to 1.6%. 7%. Now, HUL's decision comes at a time when the fast-moving consumer goods industry is still struggling with declining volume growth. The move is basically seen as part of its strategy to increase the general trade distribution, especially in rural areas, and optimize cost in this challenging phase. Now, Dharishil Patil, who is the president of All India Consumer Products Distributors Federation, has said that they will try to negotiate with HUL to kind of reconsider the margin cut and kind of give 5% margin. However, if HUL is not willing to listen, then they might halt purchasing HUL's products. So that could have a bearing on HUL. So we have to wait and watch, and we are still awaiting HUL's response. So, we are still waiting for what HUL's comments on this.
Okay, Cesar, thanks, and keep us updated on the developing story. Of course, you can log on to ndtvprofit.com and try and read more about this, if not now, in the next 1 hour. So all the updates would be there. Vijay, before we let you go, you're constructive on FMCG, I presume, by virtue of your bet on Dabur. But what do you make of something like this?
Well, I think that, these are the, requirements of time, and whenever there are margins which need to be cut. The FMCG sector has faced a lot of inflationary pressures lately, and now they need to stand on their feet because they decline. But I don't think that volumes have declined. The channel check says that whenever I moved around during the holidays and Diwali and looked at the markets and the kind of buying which is happening in large retail companies like DMart and Reliance. It is full. I think that the consumption is coming back very strongly. Even in the rural sector, we've had a reasonable monsoon. So I think post a good monsoon, the consumption remains very, very stable. So I don't think, and we are also hearing that the petrol and diesel prices would come down. So this would leave a lot of disposable income in the hands of the larger masses. So that would definitely propel a lot of consumption. So I think that it's a right move at this time. I'm sorry for distributors; it's a bit tough time. But yes, there are huge volumes associated with Hindustan Lever products. So probably they must have done their calculations. I think that inflation is ebbing, and especially during the winters, the food inflation comes down considerably. Looking at this, I think that the next couple of quarters, FMCG should do well. As I said, post the monsoon, and of course, if there is a cut in the petrol diesel prices, there is the food inflation is coming down during winters. All these things would add up to profits for the FMCG companies. So I'm fairly bullish on Hindustan Lever, Imami, Dabur, as I said earlier, and these companies seemingly should do well, at least with 3 to 6 month perspective.
Vijay, we'll leave it at that, and wishing you and family a great 2024. Thanks for joining in today.
Thank you. Same to you.
Thank you. Well, that's the view on FMCG. Just before we wrap up the show, though, Kalpataru projects arguably could be the start of the mid-cap and small-cap end of the market, but they've won new orders worth 3,244 crore rupees. Anushi joins in with some details. Anushi, we have about a minute left, so let's make it quick.
Right. So Kalpataru Projects was in focus on this order when, as you mentioned, with the stock gaining about 10.8% today and its volume buzzing at about 21 times its 30-day average. Now, this order win was included in 3 of its segments, which is the building and design, the metro project, and the transmission distribution business, which takes its year-to-date order inflow value to about 17,685 crore compared to 12,178%. So the stock to return for the year-to-date has been about 37%, but analysts still see about 7.4% more upside to this. So that's all on Kalpataru.
Thanks a lot for that, Anushi. Thanks a lot. And let's wrap up the markets and show you how we've ended for the day, for the week, for the month, for the year, maybe, and pull up the Nifty. Well, ending flat, but I have to say that while this is happening, just want to mark what's happened in the year. I know our ticker is telling you all that's happened, but if you can pull up maybe the intraday and then the 1 year chart of the Nifty and just show what a landmark year it's been for the Nifty, the mid caps and the small caps before we wrap up. So this is what we've done intraday. It's been a very tight range, but the year's chart will come up on your screen. And after dipping sometime in the month of March 26th, if I'm not wrong, or thereabouts, or March 18th maybe. I think we've had a one-way move of sorts, maybe some consolidation in the month of August, and maybe a bit of a dip here. I think we are ending the year on a high, which is a great sign. So the index has done well, but the real juice is in the mid-cap and the small-cap. And if you pull up the one-year chart of the mid-cap and the small-cap indices, 12 months, Nifty mid-cap, 47%, and almost trending near perfect move. Yes, mirroring the Nifty, but the quantum of gains much higher, and the small caps even more so. And you know, if I could have plotted the SME IPO index, that would have told you a story which is unprecedented. I mean, just the kind of moves that have happened there have been nothing short of stellar. And yes, many components to this, these gains, if you will, but arguably BSE Realty and the components there take the cake. The difference between or BSE or NSE Realty, the real estate index, the gains of the real estate index are at an unprecedented level. 12 months, BSE Realty has gained 80%. The next best index is probably at 40% or thereabouts. So that's the kind of move that we've had. But viewers, it's been special. The first 1.5 months of NDTV Profit, or rather less than a month. We launched on the 8th, so it's been about 22 days and maybe about 18 or 17 or 16 sessions. But it's been really special connecting with all of you on television as well, and on the digital offerings that we have at NDTV Profit. Thank you so much for the love that we've received thus far. To you and your team and families and friends, wishing you all a great weekend and a very happy 2024. We'll see you on the first day of the new calendar year on Monday with India Market Open. Thanks so much for tuning in to India Market Close.